Hi, this is Jerry Bowyer for the Eagle Investing Network. Time to hit subscribe. If you have already hit subscribe, time to share this video channel with somebody who could use a basic refresher on economics, finance, and investing. Maybe it's not a refresher. Maybe they need an introduction. Spread the economic and financial literacy to the whole world, and the whole world will be better off. Speaking of economics and finance and investing, let's take a look at some data. This is data for inventory to sales ratio. So what does that mean? Well, what this means is this is the ability of business to fulfill the current demand for sales from customers. So this is the amount of inventory that business has at any given time compared to the amount of sales that are going on at that given time. And so around here is sort of normal. And then something happens with COVID. People are not allowed to buy in many cases, or they're scared to buy, or maybe they're scared to go out because they think they might get COVID, or the government says, doesn't matter whether you're scared or not, we're shutting things down. Or maybe they're just worried about the economy and they don't buy things because they just get into, hoarding mode and I want to hold on to my dollars. I don't know what's going on in the world. Whatever happens, people stop buying, and inventory to sales ratio goes up like crazy. Now, what's really going on here is not that inventory is increasing, it's that sales are decreasing. So business is building things, they're making things, they're sending them to the warehouse, they're sending them to the stores, they're in the back room, they're on the shelves, but they're not moving to the final purchase, which means that they're building up. And then the government sort of says you can go out and shop again, or people get less afraid. And so that inventory starts moving off the shelves, and down it goes and down it goes. And see, now businesses actually, they're a little bit stretched in terms of their ability to fulfill customer needs. They still have more, anything, up here is above one. So they still have more inventory than sales. They got some extra. They have something, for next month, in case people want to buy more. And then they hit a situation where the inventory to sales ratio really drops off. And this is when we start to have some supply chain issues. Now, anyone who's looking at the data around here is saying, whoa, we're going to have some supply chain issues. And a couple of videos ago, we talked about that, and it was showing up in some other data. The media wasn't really covering it much until really after it was so obvious that they should have been covering it for some time. And then this is sort of the worst of it. And then there's some healing and a little bit of regression, and then some more healing. And I'm pretty sure that next time we have this data release, we'll be a little bit better off. So there's been some healing of the supply chain. So I'm not talking to you as a consumer at this point. I'm not saying this is not about whether there's going to be more supply chain disruptions or not. I'm talking to you as an investor, because what happens is when this is going on, this shows up as financial loss. This shows up as they're not making much profit. They're making stuff, but if you don't sell stuff, then that's not profit. Now, this is showing up in gross output, and in many cases is even showing up in GDP as you build up inventory. But the Financial Accounting Standards Board, FASB, says until you sell it, it ain't profit. And so we're going to see in a moment that there were some very low profit numbers, and then it kind of unfreezes. So remember this, and then remember the unfreezing. And now we're going to, in a moment, take a look at profit data. Why are we so focused on profit? Because profit is what you buy as an investor. When you go out there into the marketplace and you buy stocks or even bonds, but especially when you buy stock, what you're really buying is the underlying profitability of the business. And if you buy a broad set of stocks or stock index, you're buying the productivity and profit of the whole economy. But even bonds are affected by this, because if profit gets low enough, then you default, or I should say, if the profit gets low enough, then business defaults on the bonds, and then you end up holding the bag. All right, so let's take a look at some more data. This is profit data, and let's let it unfold from about 2011 till about now. So we're getting rid of the distortions that have to do with the Great Recession. Of course, we still have the distortions that come from the COVID coma. And what we see here is, remember when there was that spike in inventory? Well, that spike in inventory is a drop in profit. Why? Once again, because if you can't sell it, you can't book it as profit. Even though economic wealth creation is going on, you're not allowed to say, according to GAAP accounting, those are the accounting rules for publicly traded companies, you're not allowed to say that it's profit. And then what happens is, as that inventory is unfreezing, profit is going up, up, up. Look at that. Wow, what an incredible profit number we saw in the second quarter of 2021 as business was bouncing back. So anyone who was looking at that said, wow, American business is so profitable, to which I would say, then you weren't paying attention, because this is an illusion. And this is an illusion. This gave you the impression that business was highly unprofitable, when what was really happening is profit was being deferred. Profit was frozen in inventory. And then when it thaws, so a lot of this is just the accumulated thawing of this. So just think of it as you kind of if you even these out, if you average these together, then you get more normal profit numbers, sometime around here. And then what happens is, profit kind of falls off, although still pretty high. And that's the third quarter of 2021. And then the fourth quarter of 2021 is right here. Pretty good profit number. But from here on, all of this stuff, all of this baseline effect stuff, all the, it looks really good because you're coming off of a low baseline. The math illusion, that's gone. Now we actually have to earn our earnings. And so what we need to look out for the future is understanding that profitability is not likely to be as good going forward, because we no longer have the illusion of profits being deferred because they're in inventory and then thawed because they come out of inventory, making things look extra good. That sort of stuff is largely over. And now we're back to the new normal, whatever the new normal is. So anybody who looks like value investors, who might be looking at profit like PE ratios, that's a great discipline, and value investors tend to outperform. But boy, if you don't take account of the, value is PE, price over earnings or profit. If you don't take account of the distortions that are occurring, you're going to get some really weird signals. This is a time where you can't depend on just robotically following the old rules and reading the metrics and the statistics the way you used to. This is a time that calls for real understanding, to understand what the distortions mean and how to counter them when you're making investment decisions. I'm Jerry Bowyer. This is the Eagle Investing Network. If you haven't hit subscribe, time to do that now. Binge this, something that can help you make money rather than binging the stuff out there on the streaming services, which costs you money. And by the way, if you haven't, share this with somebody who you think can benefit. Thanks for joining us.